So thank you so much for meeting with us today, Monika. We're thrilled to have you here. And we want to start by asking you a little bit about your career path and how you ended up working in ESG.
Well, thanks for having me, and congratulations again on the group. So again, my name is Monika Freyman. I'm now VP of Sustainable Investing for Addenda Capital. And so Addenda Capital has approximately 30 billion assets under management. We are really focused on sustainable investing approach. We're also owned by the Cooperators, which is an insurance company in Canada, which is very much committed to communities in Canada and impact and climate. So they have actually, net zero goals along with Addenda and impact goals as well. So very much committed parent too. But I have been in impact and sustainable investing or sustainability broadly for over a decade. I was previously an emerging market analyst, and I think what really led me is I often saw as an emerging market analyst that a lot of the companies we were investing in were actually either very dependent or having impacts on natural resources, communities, and it was very interconnected with, the risks. If they were poor performers in those areas are really impacting natural resources. I just couldn't see how they could have, sustained long-term returns without considerable risk. So there was a clear link to me on the need to do more. And so I went actually and supplemented my undergraduate business degree and CFA with a master's in science, which I really enjoyed, taking a break from work for a bit and did a master's in science. And then I worked primarily for an advocacy group called Ceres in Boston, where we were really pushing and producing research for investors, but companies as well, on how to be more sustainable. And then from there, I came back to Canada and was the vice president for sustainable investing for Mercer, which is a consultancy. And I was really fortunate to get that work with Canadian clients. It was all investor clients, so pension funds. Oh gosh, okay. Sorry, my computer might want to restart on me. Shoot. Oh no, it says it's going to restart in 10 minutes. Oh, no. But anyway, so anyway, long story short, here we are. And then I pivoted to this position more recently, and just really enjoy it. It's a very fast moving, quickly changing field. It needs a lot of bright new minds. And it is very much about the future and what younger generations are going to be facing. So I think it's really important for more people to be working in this field.
Thank you. So if we have only 10 minutes, maybe we could go.
Well, we can. I can log back in after my computer shuts off. Okay. So don't worry.
Okay, perfect. So no problem. So so could you describe a bit about what is your regular day at Addenda Capital and what do you enjoy the most, for our students to understand what is the day of someone in sustainable finance?
Yeah, I would say no day is the same. So it's anything from working with clients and to companies, but often it is about really engaging with companies on their sustainability journeys. So really, talking to be it a transport company or an energy company about their climate governance, their net zero goals. Are they progressing? Where might there be concerns around certain environmental, social practices they have? And often you're building long-term relationships with some of these companies and really, trying to, have them progress. And it's often speaking to leading companies and lagging companies. So you can also learn from the leading companies globally on what best practices can be. And then you really try to engage the laggards more on moving forward. So, that's one element. Other elements are a lot of analytics and working with investment teams who are more and more doing sustainability analysis and ESG on their own as well. And so really supporting them. And there's a lot of kind of data sets and flows and helping them make sense of that information and moving it forward is another element. So it's a lot of analytics, a lot of talking to companies, and then also talking with investors themselves, just like, you know, your club or group is trying to think about, okay, what do we do about sustainability? You know, it's often peer-to-peer learning about, okay, here's some, you know, new ways of thinking, here's new, you know, like for example, on biodiversity and COP, you know, here's some new frameworks that are coming out that are actually useful, and sharing and kind of helping advance the field is what we do as well quite often.
Okay, well, thank you.
Thank you. That's a wonderful answer. So I would be really curious for your advice on when trying to measure sustainability, what data do you believe that we need to collect and how should we go about collecting it? And then how does that information help you figure out which companies are truly making a sincere effort to be sustainable versus the companies that are trying to greenwash and seem sustainable while actually not doing very much?
I would say the best advice I could give is don't think about the data. Don't start with the data. Just start with more, what do you think is a sustainable company, and conceptualize it first. So, you know, is it really focused on, you know, look at what is the core business of the company itself, the core products, the services. You know, how do you define what is sustainable from that perspective? Then there's also the operations, supply chain. You know, you can have a pretty sustainable product, but maybe be a poor operator. I think Tesla is a bit of an example of that. They actually have really important, useful products for climate change, but they have poor social practices, for example, and worker practices. So it's also kind of balancing, okay, what is going to be our definition? What are the, and what, how tilted towards true sustainability and green do you want to be? And I think it's, you know, so if you want a broader universe of companies to pick from and invest in, it's also recognizing some gray or dirtier industries and companies will still need them, like steel production and so on. So recognizing they're not ever going to be super duper green, but what is, you know, for that specific industry, what is best practice and what do we want to see and how far could they progress? So it's, I think, kind of figure out where you want to be on that green spectrum as for one, and then also really try to answer the big question of what, you know, what do we see as, what is our definition of sustainability? And you could be very creative that way, and you don't necessarily have to follow what the markets come up with. And then you sort of pick, okay, so then what are the data points we probably need? So I wouldn't start from the bottom up on the data side. I would start more conceptually downward. And there's, I mean, there are kind of known frameworks in the market that a lot of people lean on. So if you want as well, you know, there is the ISSB, which is really based on the SASB materiality mapping. So you can kind of use the SASB framework, which kind of goes industry by industry. What are the material issues for that industry? I would layer on, you know, onto that a climate lens. So, you know, you know, just really looking at the TCFD framework and, you know, unpacking for each industry or each company, like, are they able and, you know, are they able to transition, you know, and do they face a lot of climate transition risk, which is really about, are they going to come up against, you know, policy and high carbon prices and not able to kind of function going forward? Are they going to be impacted by physical climate risk? So putting a climate lens on everything is helpful. Not on like some industries aren't as impacted, but many are. So I think, you know, layer in the climate piece, but I think it's also recognizing that, you know, which, if you look at a company, kind of what are its links or dependencies on people, on natural capital. So really knowing kind of what are they dependent on from the planet, from people, and then are they actually managing and treating and connecting with those resources well? And then if not, how can they mitigate that? So maybe it's a mining company and they are by nature pretty destructive or extractive, but are they trying to mitigate that impact as well? So kind of having that kind of framework can be really helpful too. So I think also what's an important kind of evolving way to think about this is to really understand the kind of a double impact. So one, what is the impact on ESG issues to the financial well-being of company, but also what is the impact back to nature and people from the company itself. So it's called double materiality. So I think to really kind of loop that in is really helpful as well.
Wow, that's very cool. It's definitely going to be super helpful for us when we come to thinking about like how we're going to choose who to invest in and how we define sustainability. And so when we were reading about you and all of the wonderful things that you're doing, we saw that Addenda Capital, the company that you work at, has an equity climate transition fund. And we want to understand how you align your fund with shareholder preferences.
So when you say shareholder preferences, so what do you mean exactly? So
we were thinking that you might want to define it, because on the one hand, the shareholders might be the people that have like assets or like who are using you to help them, but also the ocean, the environment, like the world could also be a shareholder in what you're doing. So we're curious what you think.
Yeah, I think, often when an investment firm designs a product, it is really trying to get the signals of the actual investors, who are managing their money on their behalf. So it is very much through listening to them and understanding what their goals are from a sustainability perspective. And then we balance that against kind of what is the data in the market that will let us actually try to answer some of these questions. And I think so in a world where we still are lacking ESG data around some of these issues, sometimes we can only go so far. But I know with the transition funds, those are very much about working with the real economy, the gray, to really try to help them improve. So I think, that's certainly an area that, is exciting. My computer.
Oh, just give me a second. I will take a glass of water, okay? So do you want to resume what we were talking about right now?
I'm happy to resume with what we were talking about. Yeah. So you were telling us that for sustainability, a good approach is to go from top down, and then
shareholders.
I think, yeah, we were talking about the climate transition. Yeah.
Yes,
and how do we align with shareholder preferences?
I mean, I think, the ultimate influencers on sustainability are the actual shareholders. But I would say you could broaden it to investors or asset owners, because often, the fixed income and bond market, they're not shareholders per se, but they are very much investing in companies and engaging and influencing companies too. So I would say asset owners are the ultimate influencer on sustainability. They're the ultimate client for all of the asset management firms. And asset owners, of course, are also people and retail investors. So I think, a good role anybody could play if they care about sustainability is wherever they invest is to talk to, their financial advisor, whoever's offering them, investment products, to ask about, do they have sustainable product lines or, alternatives? And often they will, or just express that it's important for you. And that is, really helpful to communicate to the, whoever you're working with, or if it's on a platform, to seek out, because it's kind of like the more interest and demand there is around sustainability investment products or approaches, the more it will drive, investing and better research and improvements, and then it hopefully will drive actually a more sustainable economy as well. So I would say, any investor has a role to play, including your own investing personally.
That's great. So you talked to us about like the dual discussion between return, risk, and how do we mitigate the risk of like an asset with the climate and its return, and how they can be sustainable. And we would like to know, like, how does Addenda Capital integrate the risk related to the transition environment while building its portfolio?
Yeah, it takes multi-pronged approach. So, one, at the industry level, analysts are really looking at what are the really significant ESG issues that we know of that a specific industry will face, and what are, what's important, and then they'll really look for data and talk to the company to see if they're first like really disclosing and actually aware and managing the risk as one. Sometimes companies doesn't seem like they are, but others are, very much are. So I think it's one, so that's one approach, and just really tracking that over time, and if the companies are improving and really addressing some of these issues. I think another way is we overall, because you can look at risk at a company level, but you should also look at climate and other risks at the whole portfolio level. So it's also, and it's a journey, but we're trying to do more kind of top-down analysis of, okay, what you want to start to look at, what portion of your portfolio is actually tilted towards pretty high, let's say, physical climate risk, or transition risks, or maybe social risks. Like, you can kind of do this sort of aggregate analysis as well. So I think that's kind of an important overlay that, but it can be a challenge on data. So it's kind of a journey that we're on to do some of that analysis. And what you often want to think about forward-looking data. So it's not always about just carbon emissions, what's happening in the past, but it's more what are the risks going forward in a scenario where regulation comes online and really does mitigate emissions. Is that company at risk or not? So you want to have a kind of a forward-looking lens as well.
That's great. I just want to be sure, can we go over 11:15, or you have to?
I can go, let's see here quickly. I can go a time.
And then go directly to another.
I think I can go to 11:30, yes.
Okay, so maybe right now we could go to your question. Yeah.
So what is your advice for us as a club to build an environmental framework that will not only be good for the environment, but also good for returns in terms of creating positive alpha?
Oh, that's a really big question. I mean, I think, bring the best that you've learned from just overall portfolio management, and, so bring that skill set and let it be free. And then I would say, from a sustainability perspective, just, bring that skill set and sort of marry it. I think the key, I think that, and it kind of comes to a governance issue. So let the financial analysis, be strong, and then bring the sustainability and let it be critical of companies and where they're not, and then kind of bring the two together and see, okay, what are the, if this company's got really bad practices, but, it looks like a good investment, so what does that mean? So then have a way to connect those two, and it could be around your approach might be, okay, we still want to invest, but we're going to expect a bigger return from it because we see it's really risky. So have a way to kind of interconnect, or it could be in your modeling, you see a higher weighted cost of capital, or we're actually maybe going to freely invest in this company and engage and see if we can learn about it more, and then maybe divest if we think they're really, it continues to be risky. So have kind of an approach to marry the financial side with the ESG side. I think, investors, when kind of structurally, what's a challenge in the space is they're so under pressure to perform in the short term, quarter by quarter by quarter, right? So that kind of works against you. And I think there's also incredible pressure to beat the benchmark. So where sustainability gets a bit stuck is sometimes you don't see, or you're not around, and you're kind of looking quarter to quarter, how are we doing? But really, maybe these sustainability issues really play out over multi-year. So then you may be proven right, but it takes a lot of patience. So that's you got to kind of balance that. And then I think too, you may want to look at, okay, how are we actually going to compare our performance? Should it be just against the regular benchmark, or should it be kind of a more sustainability tilted benchmark or not? But I think the space is a bit tracked because clients and investors really obsess about benchmark performance, which is the broad universe. So it's hard to step away from the broad universe, the bigger benchmark. And if you could solve that problem, that would be really groundbreaking, because that is kind of a structural issue to overcome.
Okay, I see. And just before leading for our last question, what is your favorite? I'm doing a new question because I love what you're saying. So what industry really drives you, makes you you love this industry for XYZ reason, like that? Yeah.
Yeah, well, that's such a, I would say there's so much innovation in every industry. I know that's maybe a cop-out answer. So so I think that's kind of I think even every industry now, they're capturing. We were just talking about waste management earlier this morning about if industries that create a lot of waste now are getting really creative on capturing methane created by waste, and repurposing it for and kind of the circular economy. And so even I would say we have to clean our dirty industries, and so we're kind of happy to work in the messy middle, where we recognize we still need and have a society that have some pretty challenging industries that have high emissions, that produce a lot of waste. I guess what gets me excited is just cleaning up those specific industries, as boring as that may sound, but we really need to do it. I think also where there's an industry that's very tied to kind of new thinking, like what does the next generation want to consume or maybe consume less of? So if there's an industry that really tries to influence and be sustainable that way, I do get really excited by B Corps, where they're actually, the way the company itself is structured is around sustainable. It's not about necessarily just maximizing shareholder profit. There is these other balancing, so I think kind of that kind of innovation on actual goals of what a company should be doing is really exciting, I think, and we need more of that as well. But I mean, we're constantly tracking, the news around fusion and new energy. We are very energy hungry species, and we are, we're so reliant on those dinosaurs and plants that, fell to the ground. And I think there wasn't, that it's actually, we're so dependent on fossil fuels and high emitting energy sources. So it's not just those industries, but it powers so much of what we do, buildings indirectly, directly. So I think anything that can really be a game changer on battery life and really kind of creating more base load. We're not there yet, but I think it's really exciting and important to really try to stay on top of that, because energy is just so foundational to everything. And then I think maybe one other piece is, there was one other thing I wanted to say. Oh, I'm forgetting it now.
There's no problem.
Oh, I was going to say agriculture. So I think the way food systems, and we need a lot, there's some really cool, innovative companies around, let's say, not doing kind of mass monoculture. So I think the way, a big strain on the planet on biodiversity is actually agriculture. And I'm very passionate about agriculture, but, soil health, it's, 70% of human water use is actually agriculture. So it's where we're really, sucking a lot of groundwater dry globally. It's we're also a lot of the nitrates and phosphorus, and agriculture also has an incredible impact on the quality of water globally, along with a lot of other stuff. So I really feel like we need to shift the way we grow food and feed the world for the next, billions. And we need to really reset that and do a lot more. And there's so many opportunities and interesting innovations, but we really need scale, for some of the new ideas. So I'm very excited about developments in agriculture and the need to do a lot more there too.
Oh, thank you.
That sounds so exciting. Thank you so much for sharing your incredible wisdom with us and for giving us your time and input. We really, really appreciate it. Yeah.
So,
well, yeah.
So it's our last question, and I think it will really interest all our members, is what is your advice for young people that are interested in finance and ESG?
Yeah, great question. I would just say, just keep following what, personally makes you excited and passionate. I think when I started my interest in ESG, like there wasn't really jobs out there, but I just kept pursuing the passion, and the jobs there were enough of us that were passionate. So jobs get created. So don't obsess, I guess, about what jobs are necessarily out there. Like the jobs of the future are always going to be different. So just continue to really follow your instinct on what you think is important and what really resonates with you, and really feed into your own creativity, I guess, and let that drive your career choices, kind of what makes you intellectually really interested. And if you want to gain more experience, there are a lot of, the CFA Society, a lot of different, if you're not getting it through your courses at, university, there's a lot of internships, or if there's firms, just reach out. But also, there are often a lot of webinars and newsletters and forums. So you can learn a lot there. And just, there's kind of a whole community, and we're a very supportive community of each other. So I would just say get tied in any way you like or can, and just go for it.
Thank you.
Thank
Well,
you.
thank you very much, Monika. It was super helpful for us.
Not at all. And let me know how it goes. So, do follow up and check in. It'd be great, and so exciting work that you're doing. So congratulations.
Thank you very much.
We will send you the podcast once we make it. Have a great day, Monika. Take care.
Okay, take care. Bye.
Take care.
Bye.
Bye.
Thank you so much.
Still recording.